Hey, welcome back, traders. It's John. It's October 20th, 2023 on Friday. I'm recording this a little before 9 a.m. before the market opens at 9:30. Again, a reminder, the presentation on the general market update is by Rain King LLC, and I'm an amateur individual growth stock investor. Our agenda, we're going to talk about the Nasdaq, the follow-through day, some of the distribution that we're seeing. We'll re-examine the trend monitor, where we are. Then we're going to look at some institutional names. We'll go back to our watch list and some of the strongest stocks and see how they're performing, and then we'll wrap up. So the Nasdaq, let's talk about the recent follow-through day and the action we've seen. Now, before we get into today's Nasdaq, I wanted to use the Nasdaq from February, March of 2018. You know, when we get a follow-through day, we'd like to see some gains and not have distribution too soon after the follow-through day. You'll notice here in 2018, there was a follow-through day and there was some distribution on day 3, and then there were more distributions soon after, and then the rally really didn't go very far. Same thing happened in April. There was another follow-through day. You can see in this case, the first distribution day wasn't until really about 5 to 7 days after. But again, it was very choppy. This particular one actually got a decent rally out of it, but it's just choppy. So we don't like to see distribution too soon. What does a really strong follow-through day look like? I pulled January of 2019. So you can see here in early January, we had a day 7 follow-through day, very strong on the Nasdaq. And this yellow zone is the first 4 weeks after the follow-through day. And you'll notice that we continue to get very strong days, accumulation days, 1.7%, 1%, 1.3% in the first 4 weeks. And you'll notice that the first distribution day was 4 weeks after the follow-through day. So the market got going before we saw some normal distribution on the way up. So this is what a really strong follow-through day looks like. So now let's get to today's market. So here we are as of Thursday night. Last week, we had our first distribution day, but it's really been a tough week. We've had 3 more distribution days this week, and we have what we call a distribution cluster, which is really a situation where you get 4 distribution days occurring within an 8-day window. So that's not good to see distribution kind of piling up in a clustered way. So that's a very bad sign. We are just above the follow-through day low. If that gets broken, that's even more negative feedback. And ultimately, this rally will be completely dead if we undercut the red line, which is the rally day low. But at this point, this distribution is really showing us that this rally does not have legs. There's a lot of weakness in the market. So there's no reason to wait for these to protect yourself and raise your stops, if not get out of positions. This is a look at the S&P 500. Now, I included the net new highs and new lows in this panel here. And what I'm trying to point out is you can see net new lows have really been increasing. And you can see this is the largest net new low readings we've had since way back at the bottom a year ago. Here's the low we had in 2022. Even the regional banking crisis did not have this amount of net new lows. So that's not a positive picture at all. You'll notice also in the lower panel, I've shown the up-down volume. We'd like to see the up-down volume above 1, and the background turns green. Now, you can notice we've had basically one decent rally this year, and it really was from June, July into, June, July is the strongest period, but it probably started in May. And you'll notice I put a box around it. You can see that the characteristics of getting a rally mean we need net new highs, which would show these green bars. And you can see that the up-down volume is generally above 1 most of this period. When it's below 1 and the net new lows are dominating, it's very choppy or it's downtrend. So it just shows us right now that we're below 1. We're not seeing accumulation in the S&P, and net new lows are certainly negative at the moment. Now, semiconductors have probably been one of the bright spots all year for 2023. If you look at the gains since January 1st, it's been about a 56% run. which is really, really strong. But you can notice now that we've had some distribution, the heaviest distribution we've had in the SOX index in 2 months, and we're 14% off the peak. And if you actually drew a line, as I have, from the rally, which started in late May, we're very close to giving it all back. The entire June to August rally would be really wiped out if we came down into this level. So one of the strongest groups is not even performing, which is not good for the market. So let's re-examine the trend monitor. It looked more encouraging last week, but things have certainly flipped back to the negative side. We've already mentioned the follow-through day is failing. This distribution cluster is very bad. Even the breakouts and some of the setups we saw with some of the high relative strengthening, some of these early leaders are all rolling back and reversing, and we're going to look at that closer. We still have net new lows. I mentioned it last week. It was a serious caution sign, and we just have not gotten any momentum in the market. We no longer have 3 days above the 20-day. It's actually 3 days below the 20-day, so that's turned negative. The breadth has not been good, and we've noticed the volume has not been constructive. We've had higher volume on the down days, these distribution days, which is just the opposite of what we want to see. So all of this is telling us that the trend is down and really negative at the moment. So let's look at some of the institutional names. They can give us some clues to what's happening in the market. So I wanted to look at some of the big 8 names because they're so important. Institutions find them very liquid, and sometimes they will even park money there while things are uncertain. So here's Tesla. Now, I've talked about the high volume close concept in the September 9th video, and you're encouraged to go look at that. But there's a big high volume close that occurred way back here in the chart. And if you drew a line there, that sometimes can be support and resistance. So you've seen here, it was actually resistance. Finally, it broke above it, can't get there. Then it actually ran into resistance. It poked its head just above this high volume close, and then it was resistance again and pushed it back down. And then yesterday we had the earnings report from Tesla, and we've had a complete breakdown and a gap down on the report on volume. So this institutional name is showing weakness at the moment. Let's look at NVIDIA, one of these semiconductor stocks, probably the number 1 semiconductor stock in 2023. A lot of key levels in this chart. We've talked about it before. The 1 trillion valuation is roughly at 409, and that has served as support for NVIDIA 1, 2, at least 3 times, and we're starting to approach it again on this pullback. The resistance levels in the chart is that big earnings day we had back here where this high volume close was put in at 471 and change, and sure enough, this little rally got right into that and it acted as resistance. And like I said, we're coming back down to the 1 trillion level. And will this hold? The psychological 500 level has always been out there. You know, NVIDIA continues to basically base at the moment before forming a new launching pad, hopefully for a bull move. Apple. This chart has been plagued also with some short-term downtrend and some high volume close resistance. We've talked about this big volume day over here. You can see just simply drawing that line at 182, you can see how rallies into it constantly stall out at this high volume close. And this last rally really kissed it and then came back down. There's a secondary high volume close I've shown the chart, which came with this gap down news on the China and the iPhone. And you can see that's at 177 and change. And even that is a congestion area, creating some stalling in the stock. So there's a lot of congestion in this chart. There's 50-day, a downward sloping 50-day moving average. You know, can this be support, or is Apple going to break down further? Now, the strongest of the big 8 really is Meta. Meta formed this base, and you'll notice that its high volume close was initially resistance in the chart. And then eventually Meta got some accumulation and pushed through that. And it pushed through that, and it tried to break out, and it did break out for a few days, but now the breakout has reversed in this choppy market. And you'll say now it's come right down to the high volume close. The question is Meta going to see some support where prior resistance now becomes support in the chart, or is this going to break through this with the weakness in the market. So these big institutional leaders, from what I see, the chart still has some significant roadblocks in them, and it's going to take some real conviction on institutions to push them higher. There is some potential for that, where institutions might move their money into some of these liquid names as times are uncertain right now with the news, the war, Congress, etc. So let's do a check-in on some of those watch list names and what were the strongest stocks a week ago. So this is from a week ago. We said these relative strength stocks were really starting to show some outperformance. And so let's take a look at some of these and see what they're doing today. Now I picked three of the bigger ones. Here's Vertiv. Now Vertiv, if you look subtly at the chart, there have actually been 3 distribution days in the past week. That's a very bad sign. And there's earnings coming up very shortly. So this is really under some pressure right now and doesn't look that great. But it had been really one of the strongest stocks holding up, but now it's turning a little more negative. Nutanix, got out of this breakout here. It looked very strong a week ago with good volume. Now it's come back in, but the volume's been low and it's pulled back to the pivot. So it's still not a broken chart yet. The question is, will it hold or will it actually break down? CrowdStrike is probably one of the strongest names in the cybersecurity area, had a very strong move up, and it held sideways in a little flag, and that looked really, really positive as the volume declined. Yesterday, it got hit with the rest of the market and had its first distribution day. So let's keep an eye on this one because it was probably one of the emerging leaders. Now, if we look at some of the more speculative names that were on our watch list, here's a couple. Here's Duolingo. This stock, I've drawn a line where a breakout area was. It failed at the breakout in early October. It tried to break out again. You can see where it's been hit with 2 very bad distribution days. So it's weak and breaking down. Here's MOD. Again, little base consolidation, breaks out and gets hit hard with distribution days. The chart's breaking down. And even Make My Trip, which had been in a nice uptrend, performing well. As soon as it hits new highs, it sold off. And you can see where some of the distribution has been hit. And yesterday had a very bad day, closing below the 50-day. So it's been a struggle. And the stocks are giving us really not the most positive feedback. There are a few charts that are still hanging in there, but on the whole, it's weak. So let's wrap up. So the trend, which looked encouraging last week, has shifted back down. So it's definitely telling us the market environment is still not good. Our pilot positions just simply did not get very far. And when we don't get positive feedback, we back away, we step away from the market. We're flexible. The Fed, Powell made some remarks yesterday. The Fed remarks still are hawkish and bond yields are rising sharply. So this is not a good ingredient for the whole mix of a bull market right now. And exposure levels, I think they should be severely reduced, 0 to 10%. I personally have gone to cash. The message is don't fight the market. The plane, which I'll say is the follow-through day and these stocks that were starting to emerge, the plane never really got off the ground very far. And remember that cash is a position. So using that aviation analogy, relative to the market, it's better to be on the ground wishing you were in the air than in the air wishing you were on the ground. So it's a time to be very cautious and protective of your capital so we can be ready for the next rally. Now, a reminder, the Blue Sky event is November 4th. We're going to have a raffle for everyone that signs up for this during the event. So I know that Gil Morales is going to give a trial to his owltrader.com. We'll have a couple printed bound copies of the market diary. If you didn't get that, I'll be giving away my research report on the 55 greatest winners. And John Boyk has offered to also donate a couple of different books. So it'll be an interesting raffle during the middle of the sessions. Again, this event will be recorded and you can see the videos for 2 months after the event. But you got to be registered to get video access. So if you want to sign up, go to my X, which is at RainKing at JPoco722. The pinned post I have has the registration link. Hope to see you there and don't delay in registering. And the other one event I wanted to mention is a free event. That's the Boston IBD meetup, which will be next Thursday, October 26th. We've got the pleasure of having Jared Tendler join us with the author of The Mental Game of Trading. He's specifically going to talk about the fear of missing out and the fear of losing money. We'd like to make this really interactive. And so if you have questions specifically related to these two fears, send them to me at the email here. If you're willing to actually do a live 10-minute coaching session with Jared, also email me. That's a way to get some free coaching direct from Jared, which could be very valuable. And he's also going to give away a 1-month trial membership to his website and service. This will be recorded as well. All you have to do if you want to get the link is go to meetup.com, search for the Boston IBD Meetup, and subscribe to it. You'll get emails of all our events. And on the day of the event, the Zoom link will be posted at that site. And I've also put the site in the tweet in my feed as well on X, so you can go there as well. We hope to see you there. It's going to be a great event with Jared. So that's the general market update for October 20th, 2023. We'll see you soon at the next general market update.